Hi, I'm Dr. Demetrius Crane with Sia County. Thank you for joining me for What About Taxes for my nonprofit organization. I want to first congratulate you on taking the step to start your nonprofit and then taking the next step to make sure that your nonprofit is doing what it needs to do as it relates to your taxes. The first topic we're going to talk about is your 990. What is an IRS Form 990? Form 990 is an annual reporting return that tax-exempt organizations must file with the Internal Revenue Service. Now this 990, what it does, it provides information on the organization's mission, your programs, and your finances. Now the next thing you may be asking yourself, who must file a Form 990? Most federal tax-exempt organizations with 501c3 status must file annually either your Form 990, your Form 990EZ, or your Form 990N. What form are you to file? Because you know you have to file one form, but you may be asking yourself, what form am I supposed to file? Well, if you brought in $50,000 or less in gross receipts, you are required to file Form 990N. These are for organizations that have brought in less than $50,000 or less in gross receipts. If your organization has brought in $200,000 or less in gross receipts, then you are responsible for filing Form 990EZ. Or if your organization has brought in $200,000 or more in gross receipts, or you have more than $500,000 in total assets, you're required to file the long form, Form 990, for your taxes. Now, the next thing we're going to cover is the things that you're going to need in order to file your long form 990. The first thing that you're going to want to have is your mission statement and your program updates. And this simply means that you want to be able to state what your nonprofit is doing, what's its purpose. And then if you had any updates, for example, if you have a school and you added an after school program, that's a program update. You're updating a program that you've added to your nonprofit mission statement. The next thing that you're going to have is your profit and loss statement and your balance sheet. So you want to make sure that you have your current profit and loss properly prepared, as well as your balance sheet. And then you're going to want to list your current board members and your officers. This is going to be listed on your Form 990. The next thing you're going to need is your total count of employees or independent contractors. This information can be obtained from your W-2 or W-3 form or your 1099, 1096 form. And lastly, you may need additional information, especially if you're filing the long form. But once again, overall information needed will be your mission statement, your financial statement, a list of your board members and its officers, and your W-2 or 1099 information. The next topic we're going to discuss is what is the deadline for filing. Each filing organization is required to file by the 15th day of the 5th month after its fiscal year ends. For example, if your year ends December 31st, then your due date for filing your 990 is May 15th, which is 5 months and 15 days after your year closes. So if it closes in June 30th, then your 990 is due by November 15th. What happens if you decide not to file or you file late? Let's talk about some of the penalties that's associated with your 990. Filing late is basically calculated per day. $20 a day, not to exceed the lesser of $10,000 or 5% of gross receipts. $100 a day for organizations exceeding $1 million in gross receipts. If you file an incomplete tax return or a fraudulent tax return, then you're considered as filing late. Incomplete tax returns or filing fraudulent tax returns are also considered penalties for filing late. So you want to make sure that your tax return is filed on time and that it's complete. Complete means you have all of your schedules attached that's required for your organization. If you do not include a Schedule A or Schedule O or some other form that's required for your 990, it is considered late. So make sure that when you do submit your 990, that your 990 is complete. Now, what would happen if you fail to file? Well, failure to file your 990 can result in you being automatically revoked. Tax exempt status is automatically revoked if an organization fails to file your Form 990 or your Form 990EZ or 990N for 3 consecutive years. Now, there is no reasonable clause provision in this new law, and this simply means that if you are automatically revoked or revoked for any reason, your only option is to reapply. So you don't want to allow your organization to get to the point where you become automatically revoked, which is why you're here. You want to make sure that you're filing your 990 timely so that you will not have to spend all of the funds that you spent in getting your nonprofit once again. The next topic that we're going to cover today are your unrelated business taxes. And this is sometimes overlooked because sometimes we don't really know that we need to file for unrelated business taxes. And so even though an organization is recognized as tax exempt, it still may be liable for tax on its unrelated business income. For most organizations, an activity is an unrelated business if it meets 3 requirements. It is a trade or business, it is regularly carried on, and it is not substantially related to furthering your exempt purpose for your nonprofit organization. For most organizations, unrelated business income is income that is from a trade or business that you've done more than once, that is something that you do regularly. An exempt organization that has $1,000 or more of gross income from an unrelated business must file Form 990T. Now, what is an example of an unrelated business income? Is, for example, if you have a nonprofit that has a school, and then your nonprofit also owns rental property. Well, that rental income does not fit into your purpose of being an educational institution. And so therefore, the rental income will have to be filed on Form 990 as unrelated business income. And that's simply because it does not fit in your charitable or your educational purpose. And our next topic and final topic is on employment tax. Now, just because you are a nonprofit organization, every organization, whether you are a for-profit or a nonprofit, have to pay payroll taxes. You are responsible for payroll taxes. And so we're going to talk a little bit about employment tax. Before a tax-exempt organization can determine how to treat payments for services, it must first determine whether it is an independent contractor or an employee. An independent contractor, the general rule is that your nonprofit organization has the right to control or direct only the results of the work done by an independent contractor and not the means and methods of accomplishing the results. Anyone who performs services for an exempt organization or a nonprofit organization is the organization's employee if the organization can control what will be done and how it will be done. Really simple. If your nonprofit can control what will be done and how it will be done by the person that you're paying to perform services, then that person is considered an employee. We would like to recommend that if you have employees, that you consult a payroll specialist so that you can make sure that you are paying all of your employment taxes. Because once again, just because you are a nonprofit organization, you are still liable for employment taxes. So until next time, thank you for joining me. And once again, I hope that your nonprofit is on a road to success.